Hello guys, you're welcome back to my YouTube channel, right? How are you doing today? Okay, last 2 weeks we had a public webinar whereby I taught on how to use my concept, how to use the LPC system to take a trade. And last year, December, that was December 2020, I made a free a free training on my system and my trading methodology, so that you, as many people or as many individuals or as many traders as possible, will be able to trade even without applying for the mentorship class. This is just for you to know what is happening in the mentorship and how I trade and the system that I apply in trading. So in today's class, what I want to teach you today is basically how you can take an entry. I've taught you on other blogs, right? We've actually done a series of maybe about 3 videos on other blogs. We've done on fair value gap, right? These are ICT concepts, right? And I actually gave credit to him in that because it was the first person that actually made mention of that. Some people would have actually called that imbalance. Some people would have called that whatever name they really want to call it. I just adopt that name that was given to it by its creator, which is actually ICT. Then we also have other blogs. I've taught you on different other blogs you can use, and many content of such are actually coming this way. I'll be teaching you the best order block, the best rejection zone, and why your order block will not hold. All this content is what I'm going to make available for you. So in this slide, I will want you to like this video if you really get value from it, and also do well to subscribe to this YouTube channel so that as anytime as possible, anytime I upload a video, you will have access to it and you will be able to study it in that light. Okay, in today's class, I will be teaching you how you would have really take an entry based on the trade that happened. Was it last week or last 2 weeks now, right? I shared this in a public channel, right? In this So in this slide, we're going to see based on our example. Now I'm going to actually plan to post that video on my YouTube channel because of some interference. So that is why I will not be able to produce that particular video. And I made up my mind to produce another video so that you can really have access to what was discussed in that particular section. All right, so the pair we looked at that day was USD and we actually looked at an opportunity that really played out in that very day. Now we looked at 1 hour time frame. I just want to teach you the basic. Now many people will call it institutional style of trading, many people will call it smart money concept, and there are so many ideas, so many methodology that people have actually built up, maybe by themselves or maybe they actually learned it from somewhere, right? But all systems are actually still following in a pattern that the banks are actually using to trade, right? Basically LPC, in LPC class, we teach you how you can look at the market in a very, very holistic manner, so that you'll be able to look, you'll be able to see clearer and you'll be able to see the pattern that the market maker are actually giving to you, maybe to deceive the retail trader for them to reverse the market. Now, looking at this USD CHF, right, just like what we said last week, right, what is the pattern we are really looking at now? We saw market is really going in a very bullish market. You can see price eventually broke the previous structure here and actually made an higher high in this particular instance. But looking at this mini structure, just like what I said, I have a whole lot of contents to actually to teach you on, just like this mini structure, basic market structure, and some other intraday market structure. All these things is really what we're still going to see later on. Now we see this market making a high, even though it's taking out liquidity here, but eventually price break market structure. So in this slide, I will just permit me to label this as higher high. All right, I will label this as higher high. So let me reduce this to 14, right? Then also, then we have lower low here, lower low in this particular manner, right? We have lower low here. As you can see now, this is going to be considered as a lower high. So in this slide, market came back to retest this area. So let's see, how are we going to enter this trade? Many people would have actually teach you that, okay, you can put your pending order here. but really we are looking for a best way to actually maximize this particular pattern that market is really giving to us. So in this slide, we will go to lower time frame to see how you would have taken entry. Now, the reason why I'm going to take this entry, apart from the fact that this particular structure is giving us a very, very good pattern, and if you look at 4-hour time frame, you will see that this particular pattern that we have here on the 1-hour time frame, just like you can see the bigger view of it on the 4-hour time frame now. Now, on the 4-hour time frame, it is rejecting on this block, right? It is rejecting on this block, and majorly 4-hour time frame is also bearish. We have the higher high, we have lower low. Market structure was broken in this particular area, right? In this particular area, we have market structure break. Just like you can see that there, we have break of market structure in there, break of market structure, then we have another one in here, right? Another break of market structure in here. So definitely this particular structure on the higher time frame is bearish. So in this slide, when market came back to this, it came back to take out this liquidity. As you can see it here, it came back to take out this liquidity, and on the 1-hour time frame, we have sell liquidity zone, right? There's a liquidity grab there. So market came to take out that liquidity and rejecting on this zone. So in this slide, you are expecting market to really go down. Now, so let's go back to the 1-hour time frame. Let's go back to the 1-hour time frame. So when price come back to this, so let's see how we would have taken an entry in this slide. So in this, I'm going to just permit me to, let's have a replay. So we'll go to 5 minutes time frame. 5 minutes time frame is our entry time frame that we use, even though you can also devise a way to use another lower time frame that is less than 5 minutes time frame. So let's go on. So let's see how price will retrace back into the zone we are looking at. So permit me to go to 4-hour time frame to remove this particular bigger zone, so that we would not really be confused by our pattern, right? Going back to the 5 minutes time frame now. So let's see, how are you going to approach this chart? Now, before I say that, now what the basic thing you are looking for is that when price approach this chart, we want to see price moving in a compressed manner. Don't forget that price is moving in a compressed manner. That shows price is really moving in a very squeezed manner into your rejection zone. Price should not reject or should not come to your rejection zone with an impulsive move. That is actually a signal that the market maker are not ready to drop the market at that particular time. But when market structure is, when price action is really coming to your rejection zone, this is our 1-hour rejection zone. So if market price is coming back into this zone in a compressed manner, then you should know that they are really ready to sell this particular market or to bring it down, especially if this price action now when price got to this zone and also drop in an impulsive move, then we should know that there is something that is really happening in there. Now in this slide, we want to see price giving us higher low in a compressed manner. That shows is actually very squeezed, going up in terms of accumulation, but also giving us higher highs and higher lows. So in this slide, we want to see liquidity grab. After market give us liquidity grab, they want to see a break of market structure, retest that zone and drop. So basically, this is the pattern we want to see on this 1-hour zone. So let me try to clean this particular one here. So I've actually deleted that 1-hour zone, so I have to draw it again. Now this was our 1-hour zone, right, that we are looking at. At the same time, we can go to 15 minutes time frame just to refine this particular zone here. I will refine it to this particular block in here. This is a higher zone that I'm looking at. So going back to the 5 minutes time frame, this is where I want to take my entry. So when price pull back to this, and I will be looking at the reaction of price action in that place, then for me to take this entry. So let's go. As you can see, right, price is going in higher, and also you can look at the characteristics of price action in this. Look at the character that price action is really giving to us, right? Is actually taking out liquidity just as it is going higher and also creating another higher high, right? So let's see what is happening now. Price is about to get to that zone, right? So price is there, and it has already broke. It has already taken out this liquidity, just as you can see. So I'm looking forward to this low to be broken. Don't forget what I said. I said we want to see a break of market structure, so which will be this particular area that we are looking at. We want to see break of market structure in here. And if that happens, then fine. We will be looking for our entry. So let's see what is going to happen. Right. So let's go on. Right. Price did not come back to break our structure. Until then, we have another zone there. So this is another zone that we'll be looking at as our break of market structure. So let's go on and see what is happening. So this is the 5 minutes time frame. So let's see what is up here. We want that zone to be broken, and when that zone is, then this zone is broken now. So where are we going to take our entry from? Where will our entry come from? Our entry now, in this slide, this is the extreme zone that we're actually going to look at as our entry. Now, in this slide, I am going to mark this particular block here, this particular other block here, in this particular zone, and that is the zone I will be looking for my entry. Now, in most cases, I would have actually dropped to 1 minute time frame just for me to refine this particular pair, just for me to refine it to a very good zone, and my entry will be on this pair. Now, basically, let me take the this particular indicator for me to know what I am looking out for. My minimum is actually 1 to 10. I'm also teaching you guys to also go for 1 to 10 in your trading. Though you can go for 1 to 3, you can go for 1 to 5, you can go for 1 to 8, you can go for 1 to 10. Whatsoever risk-reward ratio that actually fits your personality or you actually think is okay, then you can actually go on with it. So this is the zone I'll be looking out for, because market actually, this was the highest zone. Market came all the way up here. So the best zone for us to trade is actually the extreme part of the market structure. So in this slide, now my minimum stop loss is, my maximum stop loss that I use is actually 5 pip, but in this particular indicator, I've actually set 6 pip. So I'm going to drag it down to this particular area, this 2 pip, and you know what our broker is saying. Just like what I said, I always capped my stop loss to 5 pips maximum. So in this slide, I'm going to use 3.5, right? 3.5 as my stop loss, just because of our broker, it might not really be activated, right? But initially, you should know that your stop loss is really not more than 1.5. So as you can see, this is just 1.5 pip. Just because of spread and some other stuff, then you would actually add more pip to cover for your broker indifferences, just like we can actually have that. So let's go back to 5 minutes time frame and continue playing this, and let's see if this trade will play out. Now, I've already explained this last week, so let's go on. So market, is it there already? I'm not sure. Let's see. Right. So market gets to our zone, actually activate that particular order that we've actually placed there. So let's see the next one, which is on the 1 hour time frame. Just like what I said, our minimum is actually 1 to 10. So I'm going to put it at 1 to 10. All right, 1 to 10 here, or the next liquidity zone, which is this area. The next liquidity zone, right, which is this lower low here. So let's see what this price will give to us, right? And our order, our TP was smashed in here. So guys, this is really how to take entries when you are trading, maybe smart money concept or institutional style of trading, or LPC, or name it, any kind of name that people have actually given to it. Now you can just be very smart. You can see how I actually got dropped my time frame from a 4-hour time frame into 1 hour time frame. I actually saw the market structure that is really happening on the 1 hour time frame into the 4-hour time frame into the 1 hour time frame, then 5 minutes time frame, refined into 1 minute time frame for me to pick such an entry. So in this slide, another zone, a price that actually took place, or that worked out last 2 weeks, right? I'm actually explaining the trade I explained to you guys last 2 weeks. So that's why I'm actually here now. This is GBP USD. Now, this was another trade. There was another block here, which is really a strong order block that actually moved higher in this particular area. So that was why this particular fair value gap is now very, very important for us. Now, another light is that I will really be expecting this particular zone, right? This is going to be my first rejection zone, right? It's going to be my first rejection zone, sell rejection zone. Then this is going to be my second rejection zone. Another thing that you should note is that market structure is actually bearish, right? Market structure is bearish. If you can actually squeeze this, zoom it out, you will see the reaction of market. Now, market is giving us a kind of lower low, lower high. We have a lower high here, right? We have lower low in here, lower low, right? We have lower high in here, lower high. So let's continue. Let me stop this. Then we have another one here, lower low. So you can just see what the market is really doing. We have market structure is really bearish. So as market really dropped down to form another lower low here, we are expecting it to come back to this lower high, which is really the best, right? We're expecting it to come back to this lower high, right? Which is really the best, this particular zone here. That's where I'm expecting price to really pull back to now, this lower high, right? Lower high, right? So this is the zone I'm really expecting. Is that this zone or this zone? But anyway, much more reason why this zone is really very, very important, this fair value gap, aside for the fact that it is beside a breaker zone, or let's say a very, very impulsive move, right, on the lower time frame, right? It is also sitting on a rejection block. And not only that, let's see what is really happening here. Now we have a liquidity zone here. As you can see, we see a liquidity zone here. So would have actually gone to lower time frame, a 5 minute time frame, for us to see what is really happening. How can we really take a trade from there? So let's go on. Let's see how we can actually take a trade from there. So go to 5 minutes time frame again. Don't forget, 5 minutes time frame is the time frame I actually said you can use. Now these are liquidity zone. You can see like a 338 or triple top, right? So let's go. Let's see what this price will give to us. Right. So we have a first rejection zone that was actually formed there. So let's see. Let's just continue. Right. Right. So market came down. This is 5 minutes time frame. Market came down and actually broke this breaker. Now, many people would have actually been looking forward to trade from here, but majorly, I would have actually fell from this to these two, right? Because this actually looks very juicy. So in this light, I would go to 1 minute time frame, right? This particular block is really very big. So in this light, I'm going to be using another style of taking entries, in which I don't really want to explain it. Even my students, I'm here to really explain that to them, because this is really beside the structure. Then going to lower time frame, then we might have actually looked at this particular zone here for us to take an entry. So in this slide, we'll go to 1 minute time frame, or let's say 3 minute time frame, more minute time frame preferably, right, for us to refine this pair. But in this slide, we can't see any other zone here apart from the KOB that is here, and this is not really our trading way, our trading rule. But much more reason why I would have actually go for this is because of this liquidity zone. So I'm expecting price to really come back into this particular zone and actually drop. I mean, take out this particular zone and drop. But this is not really the methodology I've really put on this on the YouTube channel, in which I am not going to really do that in here. So in this, let's just see if this is really going to work out, because we are actually back testing to see what would have actually happened. So our stop loss is here. We are going for a minimum of 1 to 10. Don't forget that, a minimum of 1 to 10. Let me go back to the 5 minutes time frame and see. All right, minimum of 1 to 10. All right, I just want to bring this to 1 to 10. Let's see. All right, 1 to 10 risk reward ratio. So let's see what is going to happen. 5 minutes time frame. Right. So price actually activate her trade and went down. But really, this is not my best trading method. This pattern, this new pattern that was just formed here, right? This particular block will be the next zone that we are really I'm going to put my trade on, even though it's really far to the extreme. But anyway, I'm still going to, just like I used to call it, a forced trading, right? So in this light, this is where I am going to be expecting market to be formed. Now, this one has already been activated, so we can expect on the lower time frame, this particular area. Let me bring my rejection zone here, right? Go back to 1 minute time frame and also refine that zone, and let's see which one will work out. So in this light, I want to refine this, then I'll be refining it to this particular area, then put my stop loss there. So I'm going to have another entry, which is this one here. Then this is our stop loss, right? And our target will be 1 to 10. Don't forget that 1 to 10. All right, let me leave it at that. So let's go back to 5 minutes time frame and see how this new order would be activated. Where is the new order? Right, this new order here, the second one here. Let's see if that will be activated. And that did not get to 1 to 10. Right, then price came up and actually stopped us out in the second one. So anyway, this is not spoiled. So far that this particular zone is still preserved. So let's see the new action. Now, eventually price took out liquidity here. So I'm going to delete all this one. Let me just delete this so that we can really have a clear zone in the market. So this is a liquidity zone. A liquidity zone. There's a sell liquidity zone. There's a liquidity grab there. So let's see the reaction of the market, right? So market has already broken structure in there. So in this light, right, in this light now, we have price actually gave us an impulsive move. We cannot really expect price to really come back to this zone and actually break structure. So this is actually a very good one. But anyway, I really want to see a very strong impulsive move before I'm really going to be a seller. So let's see. Now, this is not really good. Oh, price is just choppy in that area. Wow. So let's go on. Wow. So this is a very good zone for us here. Now, from price from what we call an NOB. All right. What we call an NOB. I already explained what that NOB is. I said it in that particular section, right? Maybe I'm going to produce another, I'm going to make another YouTube video concerning that. So in this slide, I will mark this particular zone as where I'm expecting price to come back to. Not only that, just like what I would have done, go to 1 minute time frame to refine this zone. Now I can see that this has already built up a liquidity zone. Can you see that liquidity zone here after this drop? So that is the exact zone I'm going to put my order, right? Then my stop loss will be above this high, just like what we have here. That's where my stop loss will be. So let's get that done, right? This is my entry, my stop loss, 2.9, put it at 3.5. Then our target will be 1 to 10. Don't forget that 1 to 10 or the next liquidity zone. So let's go back to 5 minutes time frame and let's see what will happen from here. Now in this slide, so let's go on with that. Right, our order is activated. Most likely, right, if I'm the one trading, I would have actually put my target in this low, right? And that's going to be still 10, 1 to 10, no doubt. So let's see what will happen, right? So our TP was smashed. So this is just a basic thing. You can see the pattern we are looking out for here is just, let me draw that out. Now, when price gave us a high, take out liquidity, give us a low, then form a lower high, then drop down. So this is now the zone that we are looking to trade from. When price retraces back into this, I want to trade from there. Not only that, I want to look for a liquidity grab. Now, this is 5 minutes time frame. If you have gone to, let's say 3 minutes time frame from here, right, you would have seen this particular pattern that I just painted. Now, this particular pattern now on 3 minutes time frame, can you see how price came back to take out this liquidity before approaching our rejection zone? Then on the 1 minute time frame also, we have this zone as our liquidity zone. So it's just about liquidity. That's why my signature trade is just only about liquidity. I just want to see liquidity happen in the market now before I'm going to take a trade. Now, guys, I know that I've actually explained so many things to you here. If you really want to learn much more of how I'm trading now, you would have actually gone to other videos and actually study them, then for you to know how best for you to pick order block, and also how you can follow the institutional order flow. Right. Not only that, now I'm still going to make so many videos, right, about this concept and some other terminology that we use in our group, and how you can actually maximize those things and really be successful in trading. So because of that, you will need to subscribe to this YouTube channel and also like this video. If I can actually get more than 500 likes for this video, right, I'm going to make much more video that will really be valuable for you. And really, I can bet it with you, in out of 10 trades, you can actually take 5 successfully. I mean 5 successfully, that you can go for 1 to 10 risk reward ratio and you really be successful in it. You can just imagine that when you take 10 trades and you lost 5, you win 5, right? With that 5, you've actually won 50%, and 5 trades that you've lost, that's about 5%. And at the end of the month, let's say at the end of the year, or let's say at the end of the week, you are 45% up in your account. Does that make sense to you? Right? I still have some other information, but I just want to make this video quick and also short as possible so that you can actually enjoy it and learn much more. I hope I've actually produced value, and I hope you've actually learned from here. So if you have more questions, you can actually follow us on Instagram. You would have actually seen it on the screen, and also join our Telegram channel, right? You can send me a question on Instagram. I'm going to direct you to the appropriate department that is going to get that done. And another good news is that we have our website running now. Our website is up now, so I'm going to make a video concerning that so that you can see all the features and all the stuff I actually have in stock for you guys. Don't forget, subscribe to this YouTube channel. And also, our mentorship class is opened. Right, for now, it's still $550. We have another special class of $2,500. But our class majorly would, the fee will be increased in a very soon amount. So you should just take the advantage of the offer we have for you now, so that you can really get value for it. All right, guys, thank you so much for listening, and thank you so much for joining. I will see you in the next video. Right, until then, have a